Hi, my name's Daniel Angelov. I'm Regional Marketing Director with Verifone, and I'm here with Balaji Natarajan from ANZ Banking Group. Welcome.
Thank you, Daniel. It's a pleasure to be here.
Thank you. Now, ANZ, Australia and New Zealand. Tell me about your presence in Asia.
Absolutely. ANZ is a Australia, New Zealand-based bank, and we are present in Asia for a fairly long time. We are present actually in 34 countries in Asia Pacific, and we all count Singapore as one of our key hubs in the region. So we have been here for a long time. Today, we are very focused on being a large institutional bank for customers in this region.
Fantastic. Now, Balaji, look, over the years, there have been lots of reports about the growth of payments in Asia and the future of payments in the region. Sometimes has since evolved since those predictions. Can you tell me how you feel Asia's stacking up against those predictions?
Absolutely. I mean, today nobody doubts the growth in Asia. It is a matter of what rate is Asia growing. And we sincerely believe that the growth in Asia is going to continue given the customer base, given the demographics, given the kind of opportunities what Asia develops. The adoption of technology is quite high. The younger population in Asia drives a lot of these new age solutions coming into play. So the drivers for economy are there. The growth story in Asia is pretty much there. So it's just maybe they may achieve some of the things much faster than most predictions state.
And what role do you think payments innovation plays in Asia's financial system?
Absolutely. The payments and financial services are a significant part of the Asian economic growth, primarily because the financial supply chain, including working capital solutions, and all of them are the ones which are key to contributing efficiency in the economy, and they are the ones which are boosting for new solutions. So a good payment system is key to any successful economy. And Asia, which has already been challenged by legacy solutions, are today adopting the new technologies, new platforms. Most Asian countries are looking to go cashless. There are nation mandates which are driving towards a digital economy. So Asia is embracing digital economy, and payments are a key part around, and innovation obviously originates with when you have problems to solve.
You're speaking cashless and digital payments. Now, what do you feel are some of the drivers that are influencing the move to the cashless society?
A couple of things. One is the kind of the government mandates, what they run. The most governments in Asia are proud to get the economies into a digital mode. So not only the regulators, but also the governments are pushing for digital economy and therefore a cashless model. Primary reason is that the velocity of money does increase quite a bit. It provides efficiency in the payment systems. And more importantly, it allows for a common standard and a customer experience which can be built on a more consistent basis. So given there's a state-backed mandate to drive payment innovation and getting into digital, that's one of the factors. The second factor which we should not forget is the demographics. Fairly young and youthful population across Asian markets, tech savvy, and more importantly, the access to technology and the purchasing power provides nice drivers in terms of why digital payments and a cashless things would capture in Asia.
I'd like to just switch to the merchant perspective for a moment. What are some of the pain points that you feel need to be solved for a merchant?
So today the merchants are probably straddled with two basic pain points. One is the kind of customer experience what they can deliver, because at the point of sale, typically in many Asian countries, you would end up merchants having multiple terminals. There's no unified omni-channel kind of an point of sale machines available yet. Second is that the fast-growing digital markets introducing a number of newer payment methods, alternate payment methods. So this continuous evaluation is putting a pressure on what kind of customer experience do the merchants provide. The second thing is the cost. Obviously, there's a margin involved in supporting multiple payment methods. So we do see these two as the pain points which most merchants would like to address, especially with the economies going digital, a lot of payment systems becoming more real-time, instant. It therefore means that there should be some consolidation at the point of sale, because after all, a payment is a settlement for something what you've done, right? You should not be paying differential prices. or if you don't pay differential prices, it's the merchant's margin which is being impacted. So we see the experience and the cost to the merchant as the primary pain points.
So, looking at the other side of the counter, the consumer, how do you see consumer behaviour changing as there's increased adoption of smart devices and smartphones?
Absolutely. So what we see today is that the customers have got experience with the social media, the Google, the kind of experience. Are we therefore able to provide a similar experience with their actual transaction, right? So payment is the last bit which sticks out like a sore thumb for any customer saying that I've done a purchase, but why should the payment be so inconvenient? So this is one of the factors when I mentioned earlier the customer experience that determines whether the customer would be a repeat customer for the merchant or what kind of experience do they have. So the customer in their individual capacity are being influenced by the various other social activities what they do, and their expectation of payment services are also defined by the similarity in that. So absence of any such options makes them feel that the payments is really cumbersome, and they look for providers or options which make it so convenient.
Now, are there any areas in fintech or payments where you feel Asia is going to leapfrog other more developed markets?
Right. I would basically reframe that leapfrog probably in terms of the size of this or the scaling up of the economy and the size of the target market, but not more so in terms of the technology, because the problem statements in Asia are different from what exists in, let's say, the developed markets. It's not a financial inclusion agenda for developed markets, but more so in Asia. And the kind of operational risk what exists in Asia, the lack of credit profiling, those are problems which are fairly unique to an emerging Asian economy, which is where we see a lot of fintechs adopting models or business cases which are valid in developed markets into Asia. So I would rather say these are variations suited to the local emergence rather than a leapfrog over a developed economy. So it's a part of an evolution within the Asia where they will pick up some use case, modify it, adopt it locally to fulfill the local problems. So that's how I would put it rather than leapfrogging.
Balaji, thank you so much for your time. I appreciate your insight, and thank you once again. Thank you.
Thank you, Daniel.